Today, we're going to talk about gap insurance on an auto policy. I hope you enjoy. There's some confusion that floats around out there in relation to automobile insurance when it comes to gap insurance and replacement cost or replacement cost coverage. So today, that's what we're going to spend some time on. And it's actually a good, from a timing perspective, it's a good time to discuss that, because when you think about it, there's a couple of things that are going on that are going to impact this and the need potentially for this. One is the significant increase in the cost of automobiles. So cars are costing significantly more than they did in the past. And then now that we're seeing a rising interest rate, that's going to have an effect. Now, because of the increasing cost in automobiles, what a lot of companies are doing in order to keep automobiles affordable for clients is they're stretching out the lien, how long they'll finance the car. It used to be pretty much 5 years was about the maximum that you could see, but now we're seeing, more years added to that, maybe 6 years or maybe even 7 years. And what this does, if you think about it with an automobile, your automobile, as soon as you drive it off the lot, it loses value. Well, when you combine that with the fact that you got a lien that you're paying against that is methodically declining, it's not uncommon in the early years of the financing of that vehicle for you to owe more on the vehicle than what its current market value is. And when it comes to insurance, the only job for the insurance policy is its job is to pay for the loss, if it's a total loss, to pay for the current market value. Irregardless of how much a person might owe on the vehicle, that's irrelevant. The insurance company's job is to pay the value of the vehicle, again, in the event of a total loss. So where the gap insurance comes into play, gap insurance was designed several years back, and it was designed as a rider or an endorsement somebody could pick up. In some cases, you can add it to your automobile insurance policy. In other cases, you can buy it maybe outright. You might buy it from the finance company. But the gap insurance, what it's designed to do is to fill that gap. So for example, let's say you bought a vehicle and you financed $30,000. Then you had a total loss a year later, and your vehicle's worth $20,000, but you still owe $35,000. I'm sorry, you still owe $25,000. So there's a $5,000 difference between what the insurance company is going to pay on that total loss and what you actually owe. The gap insurance is designed to step in, fill that gap, and cover the difference. Now, contrasting that with a replacement cost endorsement. So a replacement cost endorsement has no concern about what you owe on the vehicle. That endorsement is designed to replace that vehicle. So if you bought a 2022 Ford F-150 and you had replacement cost on it, and a year later that vehicle is totaled, then that insurance company, if they have that endorsement on there, they're going to buy you or pay the cost for a 2023 Ford F-150. So whatever it costs new. And there's all kind of slight variations, and I'm not going to digress far on that, because today it's about gap insurance. So that gap insurance becomes very important if you think about as interest rates go up, and as interest rates go up, that also is slowing down how quickly we're paying down principal. And then also as we lengthen the time that we're going to finance, that stretches out how long. So we keep a larger amount of the loan on the balance sheet for a longer period of time. And as our vehicle is depreciating in value, it's depreciating at a rate faster than our loan balance is declining. So that gap insurance becomes important to make sure that if you're underwater, it's the term that's used, meaning you owe more than the vehicle's worth, the gap insurance is going to fill that gap and make sure if you do have that total loss, you're not in a situation where the insurance is paying what the market value is, but you still owe $5,000 or $10,000 more out of your pocket to finish off the loan at the bank. I've seen cases where that would occur with somebody and they were in that situation and they would go to buy another vehicle. And it might be that if they're buying a used vehicle, that used car dealer might be able to roll that balance into the new car. Well, now all of a sudden they feel like somebody helped them out, but in reality, what ended up happening, they just went deeper in debt because now that vehicle, that new one, is even further underwater. So if you have questions about this, about gap insurance, home, auto, commercial insurance, anything related to risk management, don't hesitate to give us a call here at Westside Advisors and Insurance Services. I hope you have a great week.